and ready to use right out of the box. And here's a study worth hearing. Research shows that wearing hearing aids can reduce your risk of dementia by up to 61%. Join over 1 million happy customers and hear the difference today by going to audionhearing.com. That's AUDIEN hearing.com.
Broadcasting from the Kanowski-Bresney studios comes the radio medium Laura Lee Show.
I feel like you had to let him go.
Yes, okay. He was on life support.
You've taken on the burden for his passing. Is that true?
That is right.
There's something to do with a Barbie doll.
He used to stick the old school Barbie dolls in the cake.
Oh my God, you're giving me goosebumps right now.
The radio medium Laura Lee Show. Tune into your spirit every Tuesday at 4 p.m.
My name is Dale Pazinski. I volunteer with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear the shirt, I live it.
Give, advocate, volunteer, Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
This is Tucker.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
I was 24 when I had a stroke. I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our #1 killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint owner on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide out this month titled Building Your Emergency Financial Binder. And really, Mike, we're talking about, a set of documents that someone needs in the event that something really bad happens to them. And one of the questions that family members and friends always ask is, who should I call if that happens? And this binder should have that information in it.
Yeah, it's designed to be that one-stop shopping of, hey, what do I go for? Any number of different things that could happen, right? I mean, it could be an accident that lands me in the hospital. It could, unfortunately, be my passing. But you want a consolidated place where loved ones can go to try and find, hey, what are my first points of contact that I should make?
What are those points of contact that should make their way into this binder?
Well, I think importantly, tax preparation, estate planning, and financial advice are three of the big ones that I can think of off the top of my head. The problem is, who does that and how spread out it is varies dramatically person to person, right?
Sure.
If I have 5 different bank accounts for different things, that is going to be more complicated than if I have a single bank account at a single place and then an investment advisor that's overseeing all of the investments. But again, your results could vary.
Folks, the guide this month is titled Building Your Emergency Financial Binder, and it has all this information and more in it to make sure that you are leaving a comprehensive guide for what happens if you're going through an emergency. Way to get this guide? Call 800-393-4001, or you can also request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
So it is Chuck, Mark, and Tucker with you here today, kicking things off. And again, I think obviously all eyes remain on the Middle East, even though, look, let's be honest, markets are basically shrugging it off at this point, which may or may not end up being the right thing long term. But so that's obviously, something that continues to be in the backdrop. Yesterday we had that weird little freak out. When was it? Around 2:30 or so, when markets fell like 1% in a span of a few minutes on reports that air defenses were active around Tehran, and then promptly recovered over the remainder of the day when it became apparent that no, there wasn't really anything going on there. So you still have markets a little bit touchy, but they're not really, paying attention to this from an energy perspective other than, okay, oil prices expected to remain elevated, and that's kind of what markets are pricing in. And whether that's right or wrong, I don't really know. But that's what markets are saying right now is, yeah, this is not something that's going to derail the broader economy, not just domestically. You take a look at what we're seeing. If you were to look at how international stocks are priced right now, you take a look at what we're seeing on those major international indices, and they're within 1 or 2% of where they were pre-conflict. And so even in the broad scheme of things, markets are saying, yeah, this is not going to be a thing. Again, time will tell if that's actually the case here, but that's what's being priced in right now. And so we'll turn our eyes to what happened with Intel after the bell yesterday. Intel reported earnings after the close and had a nice little quarter, quite honestly. It's been a while since we've been able to say that about Intel, that they've put some things together. But you've got the stock now up 23% in trading today at $82 and change per share. And so the stock is now, market cap's up to $413 billion. And this is a company that was, as recently as last summer, worth only around $100 billion. From a market cap perspective, they're still just a touch shy of where they got to in the late summer of 2000 when they closed in on $500 billion as their valuation. But good just to see a little bit of positive news from the company here. One quarter doesn't mean, hey, everything's fine and things are turned around, because this is still a company that has questions about the ability to grow its sales long term, given that its revenue is now down about $25 billion, or about 30% from where it peaked in late 2021. But at least some positive momentum for the company and a good quarter here.
Yeah, if you're looking for a pop, I guess maybe this was foreseeable. Some of the I like the way you put that. They put some interesting deals. You said something to that effect together. The question is, are these, and you just alluded to it, are these one-offs? That's question number one, I think, if you're an asset manager, say, that owns Intel, or even if you're an individual considering buying it. Another is, are they going to be good stewards of the capital that investors are entrusting to them?
Sure.
Their profit margin, their net income's exploding, so their profit margin will look really good, at least in the short term. As to, I guess, if you're asking, should I buy it? You want to know, is that sustainable? Are they going to be? Are measures of management effectiveness, return on assets, return on invested capital, stuff that asset managers who dig into that type of thing and talk to management and get a sense for whether or not, frankly, they're capable of being better stewards of capital. For those and they've been abysmal for Intel. Will those improve in the long run? That's the open question. Has the culture changed to the point where they're going to be, I hate to keep using the phrase, but better stewards of capital, more effective managers? I don't know.
And ultimately, look, in order to be able to make those kinds of determinations, you need to, A, have a sense of the people involved in the management, and B, you've got to understand the technology at a very high level, which, if I'm being 100% honest, I don't.
No, I'm
I don't.
personally a generalist, so I would. Yeah.
I'm very much of the opinion, look, Intel was one of the great U.S. companies in the last 5 to 10 years. It faltered, but I'm saying this based on what I see publicly, not on knowing, like they tried to manufacture using this wafer process and focus. Guys, I don't know. I see the numbers and I see the broad strokes of what they're trying to do, and I say, yup, hasn't worked. Clearly, in order to actually make educated, informed opinions about, hey, is there something new that's going on here? You got to have a level of understanding that I don't. So I think it certainly is nice that you're seeing, some kind of return to form, at least for this quarter here. But as to, is there a broader recovery that's going to be able to take place in the subsequent years?
Right.
So, I got no idea.
Right, you've got this surfeit of capital and embarrassment of riches, really, lately, and that's going to distort measures of not distort. It inflates measures of profitability, traditional measures of profitability.
Sure.
The question again is, has the culture changed? To me, as a generalist, and you made this point, I won't underscore it again, but take it with a grain of salt. Has the culture changed sufficiently such that they're going to be able to parlay this into the types of consistently productive employments of shareholder capital that other, say, big tech names have been able to do? And we're going to talk about some others.
They've made
here in just a couple
bad
minutes.
capital investment decisions for the last 10 to 15 years.
This is sort of what I mean.
The company I'll compare them to in that respect is AT&T. AT&T, once another great American company. Led the world in terms of, building out connectedness over the course of the 20th century. Then they say, oh, no, let's go buy DirecTV. Let's go buy, HBO. Let's do all these things. And they just were not a good steward of capital in the last 15 years.
Right.
And it's been reflected in the stock price. You wouldn't go to AT&T and be like, guys, I got $20 billion. Let's go do something fun with it. You'd be like, no, I don't really trust those guys. I don't really think that's the best idea. So with Intel here, it's kind of been the same thing for the last, not as long of a period as AT&T, maybe the last, 5 to 7 years. But it's something where you still don't, just sit there and say, hey, let me run with a bag of money to Intel, because their track record of managing that capital recently has not been good, and this could just be an aberration for a couple quarters, or this could be the start of a new positive trend but it's impossible to know right now.
If the frenzy of investment surrounding AI, data centers, and so forth, if that faded over the next few years, that sounds like a preposterous proposition, but just sort of go with it.
Sure.
Then how would you feel about Intel?
They're not really. That's not really their bread and butter, though. Like that's not where they're doing a ton of interesting stuff.
So is my question wrong then? How would you have?
Well, I don't look at Intel right now and say, hey, like they're a leader in the data center space. Like, yes, they're trying to get into it and do some interesting things there, but ultimately, like, as we see with semiconductors time and time again, like every cycle is going to end horribly for all of these companies. Like, it's not an Intel thing. Like, this is not an Intel problem.
Yeah,
like,
sorry, but it's true.
Again, you can make semiconductors right now are on their 19th straight day of gains. 19 straight. Again, they're 4 days away now from doing it for every day in April. It's freaking insane. But at some point, this is going to end in tears for all these semiconductor companies because it always does with semiconductor companies. That might not be until 5, 10, 15 years from now. It might be 5 weeks from now. Like, I have no idea. It's probably not 5 weeks from now, given what we're seeing in terms of the computing demand that's out there. But it's not an Intel, like, this is not an Intel problem if the AI CapEx boom goes under. It's an everyone problem for the semiconductor
And this is going to
space.
end badly. Is it because the business cycle turns, demand falls off, and all of a sudden you've got this? Okay, I just wanted to flesh that out.
You build this crazy excess capacity
Okay.
because
It's pretty
you say, oh, the
straightforward.
demand is there.
I wanted to say it. Okay.
You spend years building this capacity, and then it's like, okay, guess we don't need it anymore. What are we going to do with it? And there's nothing you can do. These facilities are not profitable if you don't run them 100% capacity 100% of the time.
Trampoline park?
It would be nice. Bowling alley?
That'd be my
paintball?
preference, yeah.
Let's take a quick break. When we come back, let's stick with some AI chatter. We've got Oracle and Meta that we're going to discuss next.
Smart financial talk whenever you want. Find the Financial Exchange on YouTube. Hit that subscribe button and keep up to date on daily business news from New England and around the country. This is the Financial Exchange Radio Network. When it comes to leaving assets to your family, simplicity isn't always the best approach. Cushing & Dolan are experts in elder law, and their new guide is called How to Leave Assets to Beneficiaries. Adding children as joint owners on accounts or property doesn't guarantee you can avoid probate. It may create serious unintended consequences. In this guide, you'll learn why leaving assets to your children may not always be the best plan. The guide also explains how trusts can be used to stagger distributions over time, help protect assets from creditors or divorce, and ensure your family receives your inheritance in a way that makes sense for your personal situation. Call 866-848-5699 right now and ask for your free guide, How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local Heart Walk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Our Senators Edward Markey and Elizabeth Warren and Representative William Keating are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
The Financial Exchange is incredibly proud to be a partner of the Disabled American Veterans Department of Massachusetts. Nearly 400 runners have already registered for this year's DAV 5K. The event sold out in record time last year, so head to dav5k.boston for all the information about how you can participate this November or make a donation to support our great American heroes. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
All right, so we got a piece here in the Wall Street Journal. It's titled, Oracle's Deluge of AI Debt. It's a good turn of phrase. I like the, I enjoy the headline writer who put that together. Pushes Wall Street to the limit. And here's the deal. Oracle doesn't really have much in the way of free cash flow. It's just... Again, their core business is kind of stagnant. It's not really, like, it hasn't done anything particularly interesting in a while. And so basically, as they've started to ramp up these data centers that they've been building, their free cash flow has gone from around $9.5 billion over the 12 months ending in November of 24 to negative $24.7 billion for the last 12 months. Which means if you want to continue to spend money to build data centers, you need one of two things. A bunch of cash on hand. They've got about, $40 billion, okay. But look, if you're going to keep, spending money at that clip and actually accelerate it, which is what they're trying to do with, $300 billion of, expansion over the next couple of years, you're going to need to borrow a bunch of money. And so what you're running into now is the question of, hey, are these deals actually going to be able to come together for Oracle to continue financing this? And so it's unclear about some of these future projects that are tied to Oracle as to whether or not they're going to be able to build them. So as I've been saying for a while, I think two things are true at the same time. Number one, as we go through the next couple of years, there's going to be a shakeout where a lot of companies that are in the AI space are going to have real problems continuing to operate because of the dollars needed to operate. And despite that, I think that 5 years from now, we are all in one, some way or another going to be using way more artificial intelligence in the aggregate than we are today. Yeah. So I think that when you look at this, Oracle's got a real problem because they just don't have the cash flow to manage this. You contrast this as an example with Microsoft, who still has $77 billion in, last 12-month free cash flow. They've got $90 billion on hand. Great, they can figure this out. you go and you take a look at Amazon. And Amazon, again, their free cash flow's always been tighter to begin with, just because Bezos and Jassy, by extension, have always been, hey, money comes in, we want to spend it expanding. Like that's kind of the whole premise. But even they, this AI CapEx boom that they're going through, they've seen their free cash flow drop from, $50 billion a year back in mid-24 to around $7 now. So the question is, you got to start financing this, or the other way that you figure this out, you got to start making way more revenue from the AI stuff that's being done. And granted, what we have seen in the first quarter of this year is companies like Anthropic have gone from, low single-digit billions of revenue on an annualized basis to like $30 billion in revenue on an annualized basis. So it is picking up, but you've got to continue to grow that revenue in order to help pay for this. And the problem is when you start factoring in all of the depreciation for these assets that builds over time, it's not something where you're like, yeah, we did $20 billion in revenue, like that'll make it work. The numbers that you need to get to for artificial intelligence spending are closer to like $1 trillion a year, $1.5 trillion a year. So there's a ton of money that needs to get into this. And so again, we're kind of at a really interesting part in markets right now where it's really clear that there's just not enough artificial intelligence computing power to go around to meet demand today. So there's more that has to be built. This is showing up if you look at rental rates for NVIDIA GPUs, if you're trying to rent them out for model usage, they've spiked in the last month because it's very clear there's just not enough computing power out there for what the demand is right now. The question is, how do you actually go about paying for the build-out? Because it's really hard to get there. And so you've got a couple options. Number one, continue to find ways to get the debt financing done. Number two is start raising prices, which is, I think, what you're starting to see. But the problem is a lot of this stuff is also being more, it's being commoditized. So this is why you can hold a few different views in your head at the same time, which is, yeah, we're going to be using way more AI in the future. There's a ton of demand right now that needs to be filled, and so I understand why semiconductor stocks are ripping for the last month. But also, I don't know how the dollars end up adding up on all of this, and there's going to be some companies that have a really tough time because the dollars just won't work for them.
Oracle doesn't have the breathing.
They don't have
they
the
don't
horses.
have the income to cover the their times interest earned, if you like that. Ratio is like 5. Amazon's is about 40. Is an example. You got a lot of high-quality companies, and I won't name them because I'm a generalist. I'm going to get it wrong. But you got a lot of high-quality companies today that are going to be much lower-quality companies as this progresses. I don't know how long it's going to take. You've already made this point, really. And you've got others that just aren't going to be around.
So, again, this is kind of where things sit in this AI space. The follow-on story to this, Meta announcing yesterday that they are planning to lay off 10% of their workforce in May, about 8,000 people, in order to boost efficiency and offset AI investments. So basically saying, yeah, we know we have to spend a bunch of money, and we're going to try to do that through laying people off. The interesting thing to me is what happened with Meta stock yesterday. Did you happen to watch it yesterday, Mark?
No.
I did. I was
sitting there watching.
I was like a hawk on a mouse for the entire afternoon. I'm like, I'm not hungry yet, mouse, but when I am, I'm gonna get you. And that's what I was doing with Meta stock. It went down. And what's interesting to me is, typically, or not typically, but in this cycle, the last couple companies that have announced large layoffs, Amazon, Block was the guys who announced, the 40% layoff. You've seen their stock pop. And so my fear is that you get this corporate lemming behavior going on, because my big belief is that CEOs aren't really that special. They're basically corporate lemmings, and they see someone else do something and their stock goes up and they say, oh, I'm going to do that too.
Big time.
There's just not much risk-taking behavior in the C-suite in general these days. I think it's a real problem that we've gotten to through the business schoolification of American business. Is just like everyone's looking at the spreadsheet, no one's looking at what's actually happening. I digress. So my fear was like, okay, like all these corporate lemmings are going to be like, oh, if I like lay people off and say it's because of AI, my stock's going to go up. Great. Well, Meta said they're going to lay a bunch of people off and their stock went down. What does that say? We'll discuss when we return.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, how can you ensure that your kids' inheritance can be protected from future divorces?
Well, estate planning, as you know, does things like avoid probate, protect assets from nursing homes, and reduce taxes. But you know what? The family behind the estate plan can be more important. And so the trusts live on after you die, and you can have language in there that divides the assets to the children, but doesn't just pay it out, right? It holds it in trust for them and allows them to be trustee, but just not take it. In order to get it, they have an independent trustee that can say yes or no. And that way, by not owning the asset, if they get divorced down the line after you're dead and the other side says, hey, I want half of what's in that trust, you're going to say, that's great, but you have to ask the independent trustee. So it's now not going to be available to you. And more than just the ability to say no, it's the fact that you don't own it. So if you don't own it, it's not a marital asset to begin with, so it should not be even subject to the divorce. So learning how your trust works after you die can oftentimes be more important than when you're living. And it does more for you after you die than when you're living sometimes.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
All markets are mixed after yesterday's tech sell-off amid reports that Iranian negotiators are heading to Pakistan, lifting hopes that peace talks might resume. Right now, the Dow is off by about 0.33%. S&P 500 is up 0.2%. NASDAQ up nearly 0.6%. 10-year Treasury yield is down 1 basis point at 4.306%. Oil is down about 0.7%, and Russell 2000, by the way, is mostly flat. Breaking news this hour after the Justice Department said it would end its criminal investigation into Fed Reserve Chair Jerome Powell, clearing the obstacle that has stalled Kevin Warsh's confirmation as his successor. Meanwhile, Intel is the big tech story on the day after the chipmaker posted first quarter earnings that beat street forecasts, leading to more optimism that the chipmaker is finally starting to turn things around. Intel stock is up over 20%, actually now up 22% higher. Meanwhile, Meta said it will cut about 10% of its workforce, or about 8,000 workers, to boost efficiency and offset AI investments. Separately, Microsoft announced it is offering voluntary buyouts to about 7% of its employees, marking a first for the tech giant. Meta up by 1%, while Microsoft shares are up modestly. And consumer goods giant Procter & Gamble beat earnings and revenue estimates as its products volume grew for the first time in a year. Procter & Gamble stock is up by 3%. I'm Tucker Silva, and that is Wall Street Watch.
So, in the last segment, I mentioned we've been talking about Meta, and that you've seen, a number of companies announce layoffs because of, AI recently. Positive things for AI, like, Block saying, we're going to get rid of 40% of our workers because we think AI can do the job. And Amazon saying, we're, focusing on AI, we're laying off a bunch of people, blah, blah, blah. So Meta comes in yesterday, says, hey, these guys had their stock pop when they announced these layoffs. Maybe we can do that too. Plus, hey, we're trying to invest all this money into AI. We could probably, save a little bit of it because, it's kind of expensive for us to do this. And hey, even though we're sitting on $80 billion in cash, our trailing 12-month free cash flow has gone from, $55 billion down to 46, and it's only going to worsen because, we're really starting to ramp these investments up. Okay, let's do the responsible thing and, find some ways to cut headcount. Not saying you have to agree with them, just saying you have to understand the way they're thinking. And so Meta stock goes from, they closed the day before at 674, and then the day they announced the layoffs, they closed at 659. So it's about a 2.5% pullback on the stock, though at one point it was down another 1% from there. But it's not really a Meta thing. Everything else was down 1% more in the middle of the day when some of those Iran conflict fears popped up for an hour yesterday. So what does it mean when Meta is announcing layoffs and the stock doesn't perform? Because the other thing about Meta, remember, Tucker, what was the year that Zuck did his year of efficiency?
Oh, I don't know.
When was that? It was the year after they announced all this crazy spending and the market hated it. And I think it was 2023, just because that's when the stock ripped again. So it was probably 23. They laid off a ton of people in 23.
Yep, 23.
And the stock ripped because they had this year of efficiency and the market loved it. Great. So Zuck goes back to that well, plus the AI well, and yet the stock sells off. So it tells me a couple of things. The first is no one's really looking at Meta's core business being like, hey, there's a problem here. Again, their margins right now are like 40%. They've basically been in that range since 2024. The problem in 22 and 23, when they were making these big metaverse investments, their margins dropped from 40% down to 28. And so it was, okay, like, yeah, I got to get my margins back up to 40 because these metaverse things aren't, the metaverse is not working for us. So, number one, I don't think that investors are looking at the core business being like, there's a margin problem here. Number two is when we look at the AI side of things, I think Meta is still very much unproven there that they can actually compete in any meaningful way. It's just not clear that they can. The other piece is that their business is growing just fine. You take a look at their revenue, it's on a nice, steady upward trajectory. There's no concerns there. It's not something where cutting is going to be like the big thing that changes things. Part of the problem back in 22 was that revenue had been kind of stagnant for a couple of years also. They were just kind of plateauing around $120 billion a year in revenue. And so, okay, cutting some, headcount is going to, help on, getting things thinner so that even if we don't grow revenue, we can still see some improvement in margins and stuff like that. So I think that Meta's kind of in an interesting spot here where, look, the core business, again, I don't really like, I'm not like a Zuck fan. Like, I'm going to basically not really ever like the guy. I don't like, intensely dislike him or anything, but I don't know. There's a reason why we make fun of him and we don't trust him on privacy. And like, we have all these problems with Zuck. Like, we get it. But the fact is, like, they're humming on all cylinders right now, except for the AI piece. I think what this is, in my opinion, investors don't trust that Meta's going to do anything interesting on AI, and they don't see layoffs as being a key driver for additional profit. It's just not something they see there. I'm curious if you have any other thoughts on it, Mark.
Again, I think shareholders should be concerned not with little blips to profit margins. Net income, it's going to bounce around, particularly due to business cycle effects. But to the longer-term question of are they good, I hate to keep raising the phrase, but I'll use it again. Are they going to be good stewards of long-term capital?
Sure.
And are they doing a good job of managing, you called it the core business, I think that's a good way to think about it, that which has resulted in consistently good margins, not just net profit, but other margins of operating profit and return on capital and equity that point to someone being a good steward of capital. I arguably, their track record there is pretty good.
Another tech company announcing layoffs. This is going to be a voluntary one at this point. Microsoft offering its first ever voluntary buyouts. So not really a layoff yet, but it'll get there if they don't get enough people taking this up. I'll quote here from the Wall Street Journal. Roughly 7% of the company's U.S. employees are eligible, according to a person familiar with the matter. To be eligible, employees must be at a senior director level or below, and their years of employment plus age must add up to at least 70. Okay, so let's do the math on this, Tucker, just to get there.
Sure.
So, if I'm 60 with 10 years of experience, that gets me there. If I'm 50 with 20 years, and I don't think I could really be 40 with 30 years of Microsoft experience because I probably didn't start working there at 10. Probably. Unless you're, Doogie Howser of the tech space. But ultimately, I got to be honest. Look, it's pretty much, this reads as, hey, you 50-year-olds who have been here since the tech bubble, get out. Like that's who this is. They're not targeting anyone young. Like the youngest
pretty
person,
typical, though.
The youngest person you could possibly target here is like a 47-year-old who's been there since they were 24.
Right.
Like that's as far as you get. So it's pretty much, yep, all you 50 to 65ers, we would kindly ask that you leave.
Totally typical terms.
Yeah. So again, I'm not surprised that Microsoft is moving in this direction either. Again, it's not like Microsoft has any financial problems. They don't. In fact, financially, they continue to be in a pretty good spot. But they're going to have compression in their free cash flow coming as well. Again, their trailing 12-month free cash flow is still hanging out, pretty much fine. But things are changing as we look at, kind of what's going on there, because they are accelerating CapEx. And so I think they want to, reduce headcount to try to get ahead of that. And ultimately, here's the thing. The headcount they're reducing, it's a drop in the bucket. It's not big enough to move the needle, actually. Like, that's the other piece, is when you actually go and say, okay, like, show me what's going on. Like, where's the money actually go on this stuff? They're not going to get rid of 7% of their headcount. Maybe they end up getting rid of, 1 to 3%, through this voluntary procedure here. You look at the rest and you say, okay, ultimately, is it going to make, a huge difference? I'm not really sure that it does.
Yeah, these are older managers and maybe former engineers who are now managing groups.
Yep.
Whose skills are dated? Is that fair? I don't know. Not my area. But look,
it's probably how they're viewed. Look, talk to any employee in their 50s, and they'll tell you that age discrimination is a thing.
Yeah.
Oh, definitely.
Look, I think they know who they're targeting. They know who's on that list. When financial services companies do it, it's very deliberate.
Yep.
And quite well thought out.
Let's take a quick break. When we return, we'll talk a little bit about inflation after this.
The Financial Exchange streams live on X. Stay on top of the markets and get live reaction as it happens. This is the Financial Exchange.
Hi, this is Susan Powers from the Armstrong Advisory Group. When it comes to Social Security and Medicare, the decisions you make today can have a lasting impact on your retirement. There are key choices to consider, like when to claim, how spousal and survivor options work, and whether your Medicare coverage is aligned with your needs. And without a clear strategy, it's easy to overlook how taxes, income, and healthcare costs all connect. So join us for a complimentary educational seminar on Thursday, April 30th at 5 p.m. at the Crowne Plaza in Woburn. We'll help you understand your options and the decisions that come with them. That's Thursday, April 30th at 5 p.m. at the Crowne Plaza in Woburn. Reserve your seat today by calling 800-393-4001. That's 800-393-4001 or register online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Leaving assets to your family may sound simple, but you need the right plan. Cushing & Dolan's new guide is called How to Leave Assets to Beneficiaries. Protect your assets and control your family's inheritance. Call 866-848-5699 and request your free guide today. That's 866-848-5699 or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
All right, we got a piece here from Bloomberg. It's titled "Economists Raise U.S. Inflation Forecasts as Iran War Drags On." Obviously, the active phase of the conflict is no longer going on, but you still have Hormuz closed, and so economists are, kind of looking at this being like, okay, guys, you got to get moving because this is going to cause some problems more than just a brief blip. If Hormuz remains closed.
Well, we had a level shock, meaning the price of oil went up, and that's a one-time jump in headline inflation.
And if it were to go back down, then if you looked at year-over-year numbers, you'd say, okay, not a big deal.
Yeah, it might look
uncomfortable, but
we had a couple. There are some parallels here. The 70s is one. There were a couple of oil price shocks, and you can see 2 big humps in the CPI year-over-year in the 70s.
Mm-hmm.
It's a good thing to acquaint yourself with if you're interested in this. The key point is that it did come back down on its own. Another key point is that underlying inflation in that period, and now, though less so than then, is elevated. This is problematic because the Fed can't afford to accommodate, and by that I mean not push back against shocks like oil price shocks like the one we're experiencing today. The question is, do they have to? Will it come back down on its own? Or are we just at a new price level and is the shock behind us? Furthermore, does the rise in the oil price trickle into, we saw the increase in headline inflation, does it trickle into core inflation?
Sure.
Via wages, via inputs, via expectations, which have also gone up. This is the most challenging period the Fed has faced since the late 1970s. And it took a while for the Fed to get things right then, partly because there was no precedent then. There was no 1970s precedent for the 1970s. They were figuring it out. And we were figuring out as a society how much power we wanted to give the Fed to crush inflation because it was painful.
Sure.
Are we willing to give the Fed that much power? Suppose this shock lasts. Oil, say, stays where it is today for 6 months. Expectations stay elevated. What will the Fed do given the sort of unique political pressure on Warsh, the presumed incoming chair? I don't know. I'm asking a lot of questions, Chuck. I don't have any answers.
No, I mean, look, there are a ton of different variables here. The single most important one is still going to be, when does Hormuz open? Nothing else matters aside from that when it comes to inflation for the rest of the year.
And where are we today? It's closed.
Yes. So here's the big thing is, again, if you're at the point now where the best case scenario that you can get to is probably somewhere around 1.2 billion barrels of oil that are not produced because of this, because of shut-ins. You need to stop even thinking about it in terms of what ships are going back and forth, and it's more, hey, the countries that produce oil, how much are they producing? And right now we have about 12 billion barrels a day that are not being produced by countries in the Middle East. You're getting to a point, again, I keep circling Cinco de Mayo, which now is just 11 days away, and if you don't have a resolution to the situation by then that can allow for a reasonable case that production can start to resume later in May, you've got a real problem, because when you talk about global oil inventories, remember, like, here's the thing. People look at the U.S. Strategic Reserve, just as an example. And if you take a look at how much oil is in there, the peak that we had, and again, this was, kind of back at, its high point, was somewhere in the ballpark of 720, 730 million barrels. Today, you've got around 400 million barrels. And so people say, okay, that's great. Like, that there's, a lot there. And we've started to see the draws recently. We, I think, pulled about 4 million out last week. The peak that we'll be able to get to from a flow rate perspective is probably around 10 to 11 million barrels a week. And we're authorized down to around 240 million barrels. The big thing is you can't go to zero on this. Not that you would want to anyways, but the reason that you can't is because of how these reserves are held. It's in a bunch of salt caverns. It's just like a swimming pool. If you empty it completely, if it stays that way for any extended period, it collapses. Like, the oil is important to the structural integrity, and the bottom stuff honestly gets all sludgy because it's mixing with the salt, and it doesn't just work either. So you don't really have as much cushion as you think, because other things that are included in inventory, oil that's in pipelines and things like that, well, you actually need that in order to provide the pressure to keep things moving. So you're going to get to a point where this becomes problematic, and you need some positive news once that starts happening to say this is just an air pocket.
When it comes to leaving assets to your family, simplicity isn't always the best approach. Cushing & Dolan are experts in elder law, and their new guide is called How to Leave Assets to Beneficiaries. Adding children as joint owners on accounts or property doesn't guarantee you can avoid probate, and it may create serious unintended consequences. In this guide, you'll learn why leaving assets to your children may not always be the best plan. The guide also explains how trusts can be used to stagger distributions over time, help protect assets from creditors or divorce, and ensure your family receives your inheritance in a way that makes sense for your personal situation. Call 866-848-5699 to get your guide called How to Leave Assets to Beneficiaries, 866-848-5699, or you can request it online at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Let's see. What else do I want to touch on here? Oh, yeah. Ava stock. If you happen to be following them recently, you may have caught that the stock went from... what was it? It started at, about $100 a share and then went up to $8.50 after just a massive kind of short squeeze. It's back down to $232 per share now. Just regular run-of-the-mill normal stuff where a stock goes up 700% in a couple weeks and then falls 75% in 2 days. It's really normal stuff.
I can't say what I want to say because it's going to take too long.
No, that's fine. Your lack of saying says enough. Let's take a quick break. Hour 2 coming up.
When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
One of the most helpful things you can do for your family is to make sure that important information about your life is organized and easy to find. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Financial accounts, legal documents, and insurance policies are all part of a complete financial picture. When that information is scattered scattered in different places, it can be difficult for loved ones to step in and help if a crisis occurs. Our new guide called Building Your Emergency Financial Binder will show you how to organize the most important details of your financial life, including key contacts, retirement plans, investment accounts, and insurance information. Call 800-393-4001 and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Our Senators Edward Markey and Elizabeth Warren and Representative William Keating are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Todd Lutzke from the law firm of Cushing & Dolan with your financial exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, why can't you just add your kids to your accounts or to your house deed?
Well, you can. It's just not a good idea. So people who do that understand with an account, right, you can put a joint name on the account. Now, that doesn't actually complete the gift because you actually have to take the money out and then the gift is complete. But when you set it up, yeah, the asset would avoid probate. But if something happens to the child, it's going to be, available. Half the asset would be subject to the children's creditor. So you don't want that. And secondly, if you only put one kid on the deed, you've likely disinherited the other kids. So it's not really good planning overall. Whereas if you put the house in the kid's name, now you've actually made a completed gift of half the house and would need to file a gift tax return, number one. Number two, of course, it's exposed to the child's creditors and, yes, divorces. You could find yourself at some point owning half your house with an ex-in-law. Not sure that's a good way to plan. So please, put together trusts. Don't just throw names on deeds or on bank accounts because, as I always like to say, nothing good comes from giving assets away while you're living.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
It's Chuck, Mark, and Tucker with you here on a Friday. And as we kick things off, the top story in markets continues to be semiconductors. I got to be honest. I know that everyone's focused on the Middle East, and it's not like the Middle East doesn't matter. It does, but quite honestly, the Middle East doesn't really matter to markets right now. What matters to markets right now are semiconductors. And the semiconductor index is about to, again, assuming that things hold up for the next 5 hours, about to have its 19th consecutive day in positive territory, which is just kind of wild here. Again, you look at it, the Philadelphia Semiconductor Index, the last day that it went down was March 30th. And it closed that day at 7142. Again, this is Philly Semiconductor Index, so I know that no one really follows this that closely, but bear with me. 7142, sitting here today at 10,473. So, again, it's one where, just close to where it is today, it's a 46% run in 19 sessions. Which is insane. Yeah. Now, it's also happening on the back of the realization that, hey, there's not enough computing power out there for all the people that want to use AI right now, specifically companies. This is not being caused by you making pictures of hamsters, doing backflips. That uses a very small portion of the AI power because the hamster is very small. Instead, it's the elephant pictures. No, I'm kidding. That's not the problem. It's just all of these companies trying to use AI agents to actually automate workflows and things like that, which uses a lot more computing power than pictures. So I think where we are right now is a place where semiconductors are just ripping. At some point, this is going to end in tears for semiconductor companies because it always does. Like if you look at I'm trying to just pull a Philadelphia. How do we spell that? There it is. If we look at, kind of the long-term history of semiconductors and just like take a look at the Philly Semiconductor Index, which I wonder how far back the data goes on that. Okay, good. It goes back to 1994. So just to give you a sense of like some of the pullbacks that we've seen here. In the late 90s, even before the tech bubble burst, Philly Semiconductor Index went through a 55% pullback from late 97 through late 98. It then, after the tech bubble peaked, went through looks like about an 80% pullback from mid-2000 through mid-2002. Mid to late 2002. In 2003, it then went through another like 30% pullback. From 2007 through the financial crisis, it went through a 70% pullback. In 2015 and 16, it went through a 30% pullback. Like, it's just dotted by like 30% pullbacks on a regular basis because this is how semiconductor manufacturing works. So it's not to say that this will happen tomorrow. Like, I don't know. Like, this could run for years based on some of the AI stuff. It could be done in months. Like, I really don't know, but I'm just remarking that it's really impressive to have 19 sessions in a row where semiconductors have gone up. So on the back of that, you've got the Dow, which doesn't have much in the way of semiconductors, down 0.38%. The S&P 500, which has some, is up 0.44%. And the NASDAQ composite's up about 1.05%. So all three major U.S. indices, well, two of them are in positive territory. The Dow, obviously not. Other things that we're looking at in markets, 10-year Treasury, down 0.9 of a basis point. Who cares? Not much movement. The dollar index down 0.12% to 98,475. Gold is up 17.80 an ounce to 47.41. And crude oil, West Texas Intermediate, down 59 cents a barrel to 95.26. AAA national average for gas prices on the rebound the last couple days, back up another 2.8 cents overnight to 405 and 9/10. So rising about 1% in the last couple days here. I want to kick things off this hour talking about, actually, before I go further, an announcement that on Monday, Financial Exchange is going to be available in a new place as well. So in addition to all the places that you're currently listening to us, we're going to be available on Biz TV starting on Monday, April 27th. It's available on streaming platforms like YouTube, Apple TV, Google Play, Fire TV, Roku, so you can find Biz TV on all those. It also does stream on over-the-air affiliates in 36 different states, and they've got their own app. So, look, if you couldn't get enough of us, we're going to be more places. So, exciting stuff. So, in addition to all the local stations you hear us on, Sirius Radio, Biz TV picking us up as of Monday, April 27th. And we are excited to show, thank you, Tucker. Yep, excited to show our large, bald faces to all of you in new places around the country. Mark, not you. You got,
halfway.
You got a big head, but,
Thank you.
I know. It's where the
I'll take it as I'll take that.
It's where the ideas come from.
What else would the eyebrows fit on,
thank
right?
you. Yeah, it's great. So I want to talk a little bit about housing. And there's a piece here from CNBC, how the Iran war is hitting homebuilders. And it talks about how, homebuilder sentiment dropped in April. Not surprising because mortgage rates have gone up and people are concerned about the war, so they're not, looking at houses as much. And I get that. I am of the opinion that housing is, I don't want to say about to enter into a renaissance because that's like the wrong phrase. But people have been really concerned about housing for the last couple of years. I think we are getting close to turning the corner on this. And my evidence on this is twofold. Number one, you look at the southeast and southwest part of the country. I guess together that makes the South, if you will. And what you're seeing is in a lot of those markets now, inventory, which had been growing rapidly for the last couple of years, is now starting to shrink again, which means home builders in those areas are going to say, ooh, or can I get a Fandetti ooh? They're going to say,
ooh, I can do it live.
Ooh. No, I like the canned Fandetti as opposed to the fresh.
Good to know I'm not indispensable.
So in any case, you're starting to see inventory contraction in a lot of southern markets. And this is good because the southern markets are where a lot of the home building actually takes place. You go through, the Northeast where our show is based, a big, home construction community, a big new construction is like 250 units. You go to Florida and it's like, yeah, the first phase of this is going to be 5,000 units, then we're going to do another 5,000, and you just keep layering them on. Pretty soon you got a new city. So this is good from a construction volume perspective that inventories are starting to contract year over year in the southern part of the country. The other piece that you are seeing is that when you look at the amount of uncompleted inventory that's outstanding, D.R. Horton had their earnings call earlier this week, and over the last 3 quarters, the amount of inventory D.R. Horton has had outstanding that's been completed but unsold, so hey, we spent all the money to build it, but we haven't been able to sell it yet. That has declined from around 9,000 units to 5,500. Meaning, hey, guys, guess what? The number of units we have outstanding is declining. I guess we're going to have to build some more homes in order to replenish that. These are good things. Just to give you a sense, by the way, this D.R. Horton chart is fascinating. So their unsold inventory peaked at around 10,500 year and a half ago. At its bottom during the aftermath of the pandemic, when everyone was going out and buying houses like crazy, they only had 600 homes that were completed but not yet sold. 600. The national levels, by the way, not just for them, but for like all companies, and this is data from the U.S. Census Bureau. Right now, we're at about 126,000 units that are completed but not yet sold. That is the highest level that we have seen since July of 2009. It's not really a great comp, you don't want to be compared to them, but the number is starting to maybe roll over, even, not just D.R. Horton, rolling over, but you're starting to see some downward pressure on that. We've had 2 readings in a row at that 126 number, and even going back to October, we were at 125, so it's 5 months now where it basically hasn't moved. So I think that when we look at housing, yes, I get that home builders are kind of nervous right now because this spring housing season, got to be honest, it's not great. It's not awful, but it's not great.
Failure.
Not quite, Mark, but close. Where we are heading is toward a place where I think 27 and 28 are going to be great years for home builders. The obvious caveat is okay, Hormuz needs to be opened and no other additional shocks around the world and yada yada. Again, you got to yada yada weigh a lot, in geopolitics these days. But I think 27 and 28 could be great years for housing construction because we're finally seeing in the places where it happens inventory coming in, and that makes me optimistic. Let's take a quick break, and when we return, let's talk a little bit about what's going on with tariff refunds after this.
Ooh.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. Leaving assets to your family may sound simple, but you need the right plan. Cushing & Dolan's new guide is called How to Leave Assets to Beneficiaries. Protect your assets and control your family's inheritance. Call 866-848-5699 and request your free guide today. That's 866-848-5699 or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, adjutant of the Disabled American Veterans Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed, right here on the Financial Exchange.
All right, time for trivia here on the Financial Exchange. And on this day back in 1884 BC, the Greeks entered Troy using the Trojan horse. The plan was devised by Odysseus, the king of Ithaca. Homer's follow-up to the Iliad was the Odyssey. So our trivia question today, who is starring in as Odysseus in the upcoming Christopher Nolan epic The Odyssey? Once again, who is starring as Odysseus in the upcoming Christopher Nolan epic The Odyssey? Be the fifth person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and win a Financial Exchange Show t-shirt. Once again, the fifth correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Do you guys think the Trojan horse actually happened?
Probably not.
Did the Trojan in what war was that used?
What do you mean? It was the Trojan War.
Yeah, did that actually happen?
Yes, that did.
It did.
Yes.
Okay.
Well,
Did it?
Some version of it probably did. It probably wasn't anything close to like what is said. It's clear that something happened, but no one really knows what. Let's leave it there. The Trojan horse, though, did it happen or not? I'm going to go with no.
What was it?
Well, if the war didn't happen, then it's kind of moot. But let's suppose it did. Or it's at some point in ancient times, did somebody think to stuff...
I'm going to go with a Trojan horse of any kind. A horse filled with people. I'm going with a hard no. You think that you're just going to, like... Think of the levels of disbelief that you have to suspend to get there. First, okay, so you're fighting a battle against someone. And you wake up one morning and their army's just gone and there's this wooden something there. It could be a horse, an elephant, whatever it is.
Aardvark.
You're not just going to light the thing on fire just to be sure? Number two, so you're going to have all these men in, with swords and armor and all this stuff inside of there. And you're going to tell me that it doesn't either smell...
Oh, it smells.
Or it doesn't, you don't hear, a couple swords banging around inside there or something. Or someone sneezes or gets stung by a bee.
Stung by a bee.
Yeah, this stuff happens.
Inside the horse?
Yes. So I'm just saying.
Mosquito.
I exactly. It gets under the armor and then you got to stab yourself accidentally to get I'm telling you, didn't happen.
Ooh.
The Trojan War, something probably did. We don't know exactly what. But Trojan Horse, I'm going with a hard pass on any historical veracity to that one.
Yeah, why would you open... So there was a siege taking place outside of the town of Troy, the city of Troy?
Yes, and then the Spartans left. Hang on. Let me make sure I get this right. The Trojans left, and the Spartans just let the Trojan horse in.
Doesn't sound like the Spartans. They weren't stupid, right?
Yeah, A, I don't think they're dumb. And B, okay, so you see this giant wooden horse. Why are you going to bring it into your city? They just left it on wheels? What do you got, Ben?
Well, it was a 10-year war. Don't forget that. So they were desperately trying to figure out how to end this 10-year war. It wasn't the Spartans. It was a Greek coalition before there were real Spartans.
Okay, fine.
But they leave it in there. They leave it right outside the city walls. They bring it in, wheel it in. It's one of the stupidest things you could possibly fall for.
No one would do that. You've been fighting for 10 years, and then, the army's just gone, and there's this horse there? Yeah, let's just bring it in. I don't know. You've been fighting for 10 years? You think you just want a gift from them? No, you're going to light the thing on fire. Anyways, let's talk about...
Yeah, and it'd be a lot of work, too, to build, I mean. And when was that decided? Nothing else worked, so let's build a horse and hope they roll it in.
Yeah, I mean, I don't know...
Yeah.
How much does one of those even cost from Raytheon? Companies, not consumers, to cash in big from tariff refunds. So here's the deal, is you've got companies that are now going and requesting these tariff refunds from the Trump administration. In many cases, individuals paid higher prices based on companies raising them because of tariffs. And so what is the mechanism for consumers to request refunds from companies who might not have specified how much of the increase was actually from tariffs or not? And so this is one where a lot of companies may end up just reaping kind of, I don't know if I'm going to say a windfall, but all of this money back, and they don't necessarily have to share it with consumers, nor do they have an accurate way, in my opinion, to actually determine who gets the money back. Because in a lot of cases, I'll be honest, companies raise prices not directly because of tariffs on each product. There are pricing strategies that they may have used to say, okay, we need to pay $1 billion in tariffs. Let's spread that throughout all these different products in order to cover it, but not necessarily, hey, the $1 billion was going to be just on TVs, and so we just applied the increases on TVs.
Yeah, I mean, there's evidence that it showed up in inflation through goods.
Yes.
Goods that are either made here using imported inputs or imported directly.
But if you're Costco who's applying for these refunds, and they're saying that they're going to pass the refunds on to customers.
How?
Don't know.
Yeah, nobody.
Like, does Costco have, does Costco know, okay, Costco, not does they know. Here's the thing. Let's say that TVs, had a 20% tariff applied to them, just as an example. My guess is Costco probably didn't just say we're raising prices on TVs. They probably said, okay, we'll do, 15% hike on TVs and then an additional 1% on these categories of goods, and that'll get us there. Well, are you refunding the tariffs based on what was tariffed or based on what was charged? Because those could be different things. It's complicated. And again, I don't know exactly how this is going to end up working. Let's take a quick break here. When we return, we've got the trivia answer. We've got Wall Street Watch. And is there something else, Tucker? Or is that it?
More stuff.
Oh, yeah, more stuff after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Building Your Emergency Financial Binder. Mike, when we talk about the type of information that should be in there, what kinds of things should people be including so that a loved one or family member can help to keep their finances in order?
Yeah, I think, on the financial side, it's what do I have and where is it?
And how do I get access to it?
Right, and so that can mean getting access to online passwords and things along those lines. But obviously, how you share this stuff is extremely sensitive given the threat to being breached down the road. And so mainly it is, though, what is the snapshot of my financial, health, and legal life? And how do I format it in a way that people can actually interpret it?
And I think another piece there is that is also always changing. How do I let people know what changes I've made and when I've made updates to it? Because I might not have the same accounts that I used to.
Right, and the guy does lay that out of, hey, how do I document changes in here? Because you might not always have that old account at said financial institution. It could change, it could shift, you might retire. And keeping this thing up to date is critical. Obviously, the more stuff there is out there, the more complicated this becomes. And so as much of it as you can check off the list while you're still around and able to explain it is extremely helpful.
The guide, again, is titled Building Your Emergency Financial Binder, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. That phone number, again, is 800-393-4001, or visit armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio
Well,
Network.
after yesterday's tech sell-off, markets today are mixed. Amid reports that Iranian negotiators are heading to Pakistan, lifting hopes that peace talks might resume. Right now, the Dow is down about 1/3% or 181 points. S&P 500 up about 0.5%. Tech-heavy NASDAQ rallying 1.2%. Russell 2000 is up nearly 0.2%. 10-year Treasury yield flat at the moment at 4.316%. And oil down about 0.5% at $95 a barrel. Breaking news this morning from the Justice Department after it said it would end its criminal investigation of Fed Reserve Chair Jerome Powell, clearing the way for Kevin Warsh confirmation as his successor. Meanwhile, Intel, the big tech story on the day after the chipmaker posted first quarter earnings that beat expectations, leading to more optimism that the chipmaker is finally starting to turn around. Intel's revenue grew 7% from a year ago. Intel stock is rallying 23%. Elsewhere, Meta said it would cut about 10% of its workforce to boost efficiency and offset AI investments. Separately, Microsoft announced it is offering voluntary buyouts to about 7% of its employees, marking a first for the tech giant. Meta up by nearly 2%, while Microsoft shares are up by 1%. And consumer goods giant Procter & Gamble beat earnings and revenue estimates as its products volume grew for the first time in a year. That stock is up by over 3%. I'm Tucker Silva, and that is Wall Street Watch. In the previous segment, we asked you the trivia question. Who is starring as Odysseus in the upcoming Christopher Nolan epic, The Odyssey? That will be Matt Damon. And Mark from Tingsboro, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Mark. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
So, the next couple pieces in here, all AI related. I can't do any more AI today, Mark. Is that cool?
Absolutely.
I've had enough there. Instead, I want to talk about a piece that I completely disagree with, which is, from Bloomberg Opinion, more corporate power can help solve the affordability crisis. And basically what it's saying is that if you get bigger companies, they'll be able to have more economies of scale, and so they can make things cheaper. Which I just don't buy as it's basically saying we should do less antitrust enforcement. Not that we do any
the opinion pieces.
Not that we do any to begin with, but it's basically saying hey, don't worry about antitrust, and instead we should allow bigger companies, because in the airline industry, bigger companies have made for lower fares. So, a couple things can be true. Number one, airfares in general, I happen to think, aside from recent price increases because of fuel, they're fine. I still think it's amazing that in general you can pay like $300 to fly 3,000 miles across the country, and the worst thing that usually happens is that you're like an hour and a half late. It's pretty remarkable. But here's the thing. Raise your hand. Don't do it if you're driving. Just raise your mental hand. Raise your hand if you actually like airlines. I'm not hearing any hands going up. And part of that's because I can't hear you, but it's also because I don't think anyone's raising their hands. And the reason why is that generally, I think most of us think that the level of customer service that we get from airlines, not from like the people that are there, but just from like, hey, here's what airlines say is an acceptable level of service. I think we generally think it sucks. Tucker, like, is that a fair assessment?
Sure. Yeah, I would say that.
You know, it's like, okay, like they lost my bag again, and I couldn't make my connecting flight, and then we sat there for hours. Like, I don't think we find it an enjoyable experience. And I do believe that this is because of the lack of competition, because if you only have like two companies competing on a route, they can basically collude for the pricing. They don't necessarily call each other up and say, hey, what are you going to charge? It's more, okay, if you charge this, I'll charge that too. And they don't really have any incentive to operate better than the other guys because there's no competition on the routes. And so they don't have to provide better service or better performance. Now, I think that if you extend this to like a lot of businesses, it's kind of getting there. I'll be honest. Like, talk about the rideshare space just as an example. I had a case last year where I had a ride that was scheduled from, I forget which one of them it was, but guy didn't show up. Okay, like this is kind of a problem. Have to be getting somewhere. Trying to deal with customer service at these rideshare companies is non-existent. It absolutely sucks. Like they have a stripped down bare bones thing, and
FAQs
basically, or like, hey, talk with our chatbot. To which it ended up with like, okay, like, do you understand all the 4-letter words that I'm sending to you? And basically, like, no one could help. And it was not in an area that had taxi availability. It was not in an area that had any other kinds of transit options. And so it was just like, oh, we didn't come? Sorry, I guess that happens sometimes. And so I'm not a believer that consolidation is the answer. Yeah, it might make some things cheaper, but the overall experience sucks and gets worse. And this isn't even talking about the other piece of this, which is, hey, if there's no competition in a certain industry, then employees who work in that industry have to work for that company regardless of how bad working conditions are, as opposed to having other companies that they can hop to if the company is treating them badly. So I am not a believer in let companies get as big as they want and we need more corporate power. I think that sucks.
Well, airlines were deregulated in '78. There were
which airline deregulation you can point to as a huge success.
Viewed as one of the bigger policy successes of the second half of the 20th century. So, and the result was more competition, lower airfares.
Correct, more competition,
more routes. So we're living in a post Pan Am world. Pan Am was the dominant, or one of the TWA Pan Am. They were creatures of the Civil Aeronautics Board, I guess. So we're living in a post-deregulation world. What are the barriers to competition in airlines? And maybe a more interesting question is, what do we think the problem is with airlines? Is it just service? Or
it's a horrible business.
Yeah, okay. So inherently really capital intensive.
You need a lot of money.
Even if, go ahead, sorry.
Yeah, and maybe you'll make it work over time.
And even if only one person buys a ticket, you have to fly the plane. So
we don't have to.
Well, I'm exaggerating a little, but it's capital. The fixed costs are quite high.
Yeah.
So in an industry like that, bigger is probably better. But I don't think she's making that argument generally, though, unless I'm misreading the thrust of her.
I don't know. It seems like it.
Because,
I'll quote here. Competition is still vital to the economy, of course. Big companies that face no competition can use their power to overcharge customers, and they are at risk of becoming less innovative and wasteful. There is an undeniable tension in the economy between allowing scale and promoting competition, and at least in the airline industry, a little more scale for budget carriers and a little less competition might have been just what consumers needed. But this gets at the wrong side of the problem.
This is also saying
hey, we should have let Spirit and JetBlue merge because then they would have been big enough to compete. I get that. The real problem was that we allowed Delta and Northwest to merge, and that we allowed United and Continental to merge, and that we allowed American and US to merge, and so we made these giant companies that then you can't compete with. If you instead have actual competition in the space, then you've got like something real that you can do there. Otherwise, okay, yeah, like there is no way that new upstarts can get into the business in any meaningful way right now.
It's good to think about these things in a perfect competition framework. When economists say a market economy generates the best possible outcomes and a planner couldn't improve on them, they're making certain assumptions about competition.
Sure.
So, to your point, more is better. The more companies, the more control a company has over prices, they're, to the extent they're not price takers, they're price makers, that comes out of consumer welfare. So unless you're willing to, say, regulate profit margins, I don't see how her little prescription here, if that's not overstating it, would be socially acceptable.
Let's take a quick break right now. When we return, Paul Monica from Barron's joins us after this.
The Financial Exchange streams every day live on YouTube. Subscribe to our page and follow the markets all morning long. Only here on the Financial Exchange Radio Network.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. When it comes to leaving assets to your family, simplicity isn't always the best approach. Cushing & Dolan are experts in elder law, and their new guide is called How to Leave Assets to Beneficiaries. Adding children as joint owners on accounts or property doesn't guarantee you can avoid probate. It may create serious unintended consequences. In this guide, you'll learn why leaving assets to your children may not always be the best plan. The guide also explains how trusts can be used to stagger distributions over time, help protect assets from creditors or divorce, and ensure your family receives your inheritance in a way that makes sense for your personal situation. Call 866-848-5699 right now and ask for your free guide, How to Leave Assets to Beneficiaries. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Stay connected between shows. Follow the Financial Exchange on Instagram for daily clips on business news from New England and around the country. This is the Financial Exchange.
Ladies and gentlemen, the weekend.
If you missed any of our shows from this week, you can find them on our YouTube page. We stream the show live every day, but also archive every hour of the show. So go to YouTube, search for the Financial Exchange, and be sure to hit that subscribe button.
As promised, we're now joined by Paul LaMonica from Barron's. Paul, how you doing today?
Good, thanks. How you guys doing?
Doing well. Like what your G-men are doing in the draft yesterday. Exciting day for you.
Yeah. I am pretty happy with what they've done. Was hoping Jeremiah Love might have slipped to 5, would have made it for more intriguing, but we'll see.
I think you're building the right way. So I think it's going to be exciting, and Giants could be a team that makes a dare I say Patriots-like run with some improvement this year. We'll see.
We will see.
Paul, you got a piece out this week. It's titled "Don't Fret the War: Why Big Money Investors Are Bullish and Where They're Investing Right Now." Talk to me a little bit about this.
Yeah, this is our semi-annual big money poll where we, along with research firm Erdos Media Research, contact, in this case, 105 money managers to get their thoughts on the markets, both big picture as well as stocks they like and don't like. And what's interesting is that they are more bullish, these money managers, now than they were the last time we did the poll in the fall, and much more bullish than they were this time a year ago when the Liberation Day sell-off was happening. But what's interesting, I think, is that Tesla, which just reported earnings a couple of days ago, stock fell on that. That remains the least favorite stock by far in the poll. I think it was 25 of the 105 responders said that they thought that Tesla, despite falling this year, was still the most overvalued stock.
When we look at other messages that you take from this, what were other things that stood out that may be different from kind of the conventional wisdom at this point?
Yeah, I think that I don't know if I would say it's a contrarian view necessarily, but the investors are definitely in the big money poll expecting that the broadening of the rally will resume, and that it's not going to be just the Mag 7 and the big tech companies that have rebounded pretty sharply, maybe with the exception of Tesla in April. I think that there are expectations that small caps will do well, especially if the Fed does resume its rate cutting later this year, with Kevin Warsh, should be taking over for Jerome Powell once the Senate, assuming they confirm him, which seems likely. And then the international trade. A lot of the respondents felt that there are more values overseas, both in developed markets like Europe and Japan, but also emerging markets, maybe not as much China, but South Korea and Taiwan and Latin America and Eastern Europe as well.
In terms of that international thought, how does that mesh with the idea that international markets right now are more at risk of short-term energy disruptions because of the Middle East conflict?
Yeah, that is a great question. Obviously, because the U.S. has a much greater reserve of oil than it did, in the 70s and, even the 90s during the Gulf Wars. There are many more worries about European consumers and businesses getting hit by an oil crunch in a way that U.S. stocks may not, but that valuations may reflect that. So that's why there could be still some compelling bargains in Europe, even though economically they are more exposed probably to higher oil than U.S. consumers and businesses are.
What about the bond market? What kinds of things are we hearing on that side?
Yeah, the bond market, is interesting. With regards to the Fed, you are, expecting that there will be, maybe some more rate cuts later this year. But bonds are, expected to be, still a good income producing part of many of our participants' portfolios, but they're far more bullish on stocks and even other assets than bonds right now.
Very good. Paul, appreciate you joining us today, and I hope you have a fantastic weekend.
Great. Thank you so much. Really appreciate it.
That is Paul Monica from Barron's talking about what he's been seeing in the market recently. Mark, you got anything catching your eye that we didn't cover yet today?
University of Michigan surveys consumers monthly, asks them about their feelings about the economy, so-called sentiment, asks them what they think prices will do over the next year. They don't use the word inflation, but that's what they are trying to get at with the question. Consumer inflation expectations jumped last month preliminarily to 4.7%. That's year ahead expectations. Taking the tariff spike in expectations out of recent history, that's the largest reading since mid-2022. And this is a problem, Chuck, as we've been talking about for the Fed. Expectations make their way into actual inflation because firms set prices based on them. People make wage demands, in theory, based on them. So they're an important part of the inflation process, and it complicates the Fed's job even more.
And the interesting piece, so like when we look at this, we normally talk, Mark, correct me if I'm wrong, you got three pieces that play into inflation. Expectations are one of them. Supply shocks can be another one that we end up with, and the demand side. Like, do you have like any kind of increase in demand? The piece that is interesting to me is, again, we're starting to maybe see some signs that the labor market's perking up a little bit. Claims remain low in terms of initial ones. Continuing claims are falling on a year-over-year basis now. Atlanta Fed wage tracker is starting to tick up a little bit as well. We've had a couple good jobs reports recently, though one sandwiched in the middle that was not. But you look at it and you say, okay, if you've got expectations ticking up, and you've got a supply shock, and maybe you've got demand, ratcheting up a little as job growth picks up and wage growth picks up, you potentially do have this convergence of those three factors that could point to not necessarily a return to what you saw in 21 and 22 for inflation, but it could be something that the Fed does have to deal with in the second half of this year that is not so transitory, even depending on what happens with Hormuz. Yeah, the Fed's got to manage expectations. It's got to manage the gap between what the economy can do and what it's doing. I'm not sure if that gap's positive, negative, or zero right now. The supply shock component of the model you mentioned is undoubtedly pushing up prices and pushing down demand, so possibly working against that excess demand component. That's a little technical, but the long and the short of it is the picture is exceptionally cloudy, and the Fed's job is always hard. It's always trying to balance inflation and unemployment. It's really hard right now. We're going to take a quick break for the entire weekend. I hope you don't mind, but we're going to try to take it easy and get ready for a big week next week. A lot of earnings, including, circle your calendars for Wednesday the 29th. It's a big one. We'll see you back here on Monday. Ooh.